Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be looking at the 23rd Commitments of Traders report of this year. And as we always do, we will be starting off by looking at the largest changes in commercials positions. But before I do the review, I just want to remind everybody who is new to COT analysis that we've got some pretty cool tutorial videos here, also some educational videos. And of course written materials on the Commitments of Traders report, everything you need to know about the basics. So back to the review, and starting off with our first market, the dollar index, where we have that 21% change in commercials positions. Here we have a larger view of the charts. This is the change size. You can see that compared to the average changes in the past 1 year, this is a relatively large one, pretty large. Of course, it is a bullish COT change signal, also bullish change signal in small speculators, a much greater than average change size over there, 44% to be specific. Now, if we look at these changes going back in time, you may see that these bullish COT changes in the dollar index tend to be successful signals, at least in this this 1 year time horizon. We have a few larger than average change sizes. The first one from June of 2019, just at that low. We have a bit larger change over here in October of last year. A much greater similar change size from December of 2019. Prices did go a bit higher from there, maybe not the best signal. But then here in early March, we had that beautiful, pretty large bullish COT change signal just before the dollar index started to rise significantly. So of course, don't forget, these reports are showing you data from Tuesday, and we received the data from CFTC on Friday. So there is a little bit of lag over there. Nevertheless, it is a bullish change signal, suggesting in the near term we should be seeing a bit of a rise coming in the dollar index. Now, if we open the 5 years chart, you can see how extreme this market is. We are definitely much closer to bullish COT extreme levels. You can see the last time we were at such levels, basically in case of commercials, 104 reports ago. In case of large speculators, 10 reports ago. But more or less visually, it's quite obvious to see this range over here, starting from July of 2017 throughout May of 2018. Just if you look at the price chart, just at these lows, we had that bullish extreme. And we are very close to those extreme levels now. Okay, so that suggests that not only do we have a short-term COT change signal suggesting for higher prices coming in the dollar index, but also the COT extreme seems to be painting a more bullish picture in the dollar index. Okay, so moving on to our next market, the South African Rand, where we have a 16% bearish COT change signal. You may see that change size on the chart, much greater than average. We've seen greater changes in the past. It is bearish, of course, suggesting after this rally that's been going on for a few weeks, we may see a bit of a rebound in the market. Move on to the 5 years chart. You can see that we are, I would say, still a bit closer to bullish extreme levels, but we have moved away in the past couple of weeks from that April extreme that you can see on the charts. Of course, it's nothing too special. We have not reached any significant bearish extremes, nor did we reach any bullish. So I would say it's mainly the change signal in this recent report that is could be considered a little bit exciting. Moving on to a different market category, the softs. In this case, we're talking about the coffee market. Here we have a 15% change in commercials positions, larger than average change size. Again, we are talking about a bullish COT change signal, suggesting a bit of a rise coming early next week. And of course, you can see how well these bullish changes come just before we start seeing a bit higher prices. So there's some examples over there from early this year. If we move on to the 5 years chart, you may see that we have been actually coming away from these bearish extreme levels from December of 2019. You may see a very successful signal, relative bearish extreme in these levels. So we are a bit going towards bullish levels right now. Nothing too special to talk about. I would just go on and search for other opportunities, and that's exactly what we will do. Looking at large speculator COT Extreme, we've got the Swiss franc on top of our list with a 204 report extreme over there. Of course, here we are talking about a bearish COT Extreme, suggesting after we have witnessed a bit of a rise in the market, we should be expecting some weakness. And I would say not only do we have that extreme in commercials, large speculators, but if you look at small speculators compared to their 5 years performance, relative to their performance, they're the more leaning towards the more optimistic side of the market. That tends to be a good bearish signal. Gold will be our next market with a 49 report extreme in large speculators. You may see that is the exact same extreme in commercials. Although it's coming on, it's in the second place analyzing a large speculator COT Extreme. I would not consider a 49 report extreme to be too significant, especially if you look at the charts. We are actually more closer to bearish extreme levels. Okay, so we would definitely be opening our eyes and focusing more on the possible bullish side of the market if we'd have an extreme similar to the one we saw back in the fall of 2018, September, October, as you may see, or from December of 2015. That was a beautiful example as well. So we are not at those levels, still much closer to bearish extremes. So that's something you should keep in mind. Moving on, jumping over grains complex, that's something for our subscribers. The gasoline market will be our last market for this review with a 33 report extreme in large speculators positions. Now you can see that extreme on the charts right now. We are going closer and closer to bullish COT extreme levels, but the extreme that we had in May of 2017, you may see, shows us that there is some more space left for the market to reach those extreme levels. So we should not be surprised if we see a continuation of this downtrend in the market, and with that we would see a rise in the bullish extreme that we are witnessing right now. So we had that bearish extreme just before the market had a significant decline, suggesting COT extreme signals tend to be correct in this market. Now we are moving away from those significant bearish extremes, headed towards a little bit more bullish territory, although we do see the rise in the price as well. So that was all for this review. Of course, don't forget you can look at all COT charts. All the market categories are available for anybody who decides to subscribe. You can, of course, analyze new data sets, other data sets, and of course, all the COT report types that CFTC offers is also available. All the data types, talking about futures and options data, and our special options only data set, which I believe is very unique out there. You can, of course, go deeper in the change analysis, looking at multiple report changes defined on any look back period that you wish. Of course, an extreme analysis can consist of the COT index, analyzing it. Also, the move index is something you may do, or you can actually look at the long-term trend indicator, a very useful signal here at COT Base. And last but not least, we've, of course, included in our service the volume and open interest analysis as well, which I believe is a very successful tool in anybody's trading system, especially combined with COT analysis. So that's all for this review. I appreciate your attention. Thank you very much for being with me. I wish you a pleasant weekend. Take care. Goodbye.